My friends, wanted to jump in here and make my weekly AMC Outlook video. Before we get into the charts and the discussion, please, if you haven't already, follow me on Twitter, Colin_Gladman, easiest way to keep up with my thoughts, news, and just kind of what I think is going on in the markets. Also, too, nothing I say on this channel is financial advice. Everything that I say is for educational purposes only, and kind of how I look at the stock and how I make my plays. If it's helpful to you, please like and subscribe. Tell your buddies about it. If it's not helpful to you, please click off the video and go do your own thing. I really do not care. So I'm going to try to keep this video as short as possible, but you guys know me, man. We're going to get the information out and go over as much as we possibly need to before heading off into the week ahead. So first things first, I kind of pulled up on Option Strap, looking at a couple of calls and puts. So first things first on the calls. So what Trey and Astro and a lot of guys have been talking about recently is been talking about how market makers are going to shift the market or particular stocks in the ways of what is kind of a lower volatility standpoint, okay? And what that means is essentially when AMC is running really hard and the volatility gets really high, the implied volatility, the IV gets really high on calls, more than likely that's going to be where you start to see the pullback. And so in my personal opinion, all Trey and Astro are trying to do is basically help make people more money by basically saying when you see that IV start swinging, super hard, from a call standpoint, it's not unwise to also hedge, your downside with some puts, and then the money that you make from the puts could be used to acquire more shares. Honestly, essentially kind of the thing that I've been talking about for as long as I can remember with my covered calls. The big thing is when you buy puts, obviously you're not risking your shares at that point in time. I have always said I'm not massive on options, and so that is why I've always just sold cover calls against my shares. And also, too, honestly, I have enough shares that I'm willing to part with some along the way to make sure that I'm collecting premium and, like I said, my money is working for me. So at the end of the day, as always, you got to do what's best for you. But I really believe that what they're talking about is, people just hear buy puts and they freak out and you're just trying to kill MOAS and all this other kind of stuff. And I don't believe that's the case at all. I believe they believe that that's only going to help if you understand options in the market. That's going to help AMC apes acquire more shares. That's just my personal opinion on it. That's why I've always talked about riding the waves. But if you look at calls, so right now AMC is at $18.24. So I just looked at like a 1950 call that would be expiring this week, and essentially the IV on that is going to be around 161. And then I looked at the exact same difference. So a 1750 put, IV would be around 150. So it is still a little bit more, the IV is still leaning towards the call side, but it's starting to become much more, balanced out. And that's what you want to see. Anytime it's going to get drastically one way or the other, then that's when you're likely to see the market shift. If we jump over here and we look at the charts, I tweeted this out a couple of days ago. This is literally, so AMC is on your left and SPY is going to be on your right. Both candles are starting on November the 30th, and you can see how AMC and SPY have, almost traded identically. Okay, obviously there's some differences, but right here when AMC was just ripping really hard, what was SPY doing? Oh yeah, that's right, SPY was ripping really hard. So this is why I always preach that the overall market conditions matter so much when we're looking at AMC. Now, once an actual, squeeze or, gamma ramp, however you want to look at it, is taking place, then it's okay for them to diverge a little bit. But when they're trading like this, if the overall market is just dumping, it's hard to imagine a scenario where AMC is going to be just ripping, okay? So, what is going on, like I said, in the overall market is going to matter when it comes to how is AMC going to be doing. So let's go in here and let's look at some important levels. So this is the chart that I was following, the event that I was following that made me try to preach as much caution as I possibly could when it came to, I know AMC is ripping. However, once we get up here into this $34 range, we really need to see the volume continue. So the volume looked great leading up to 34. I think we had a couple of days where we had, 200 plus $1 million volume million shares traded volume when we were pushing up to the 34. But I said, I tweeted out, I said, this is it. We're reaching the critical level. And then the halt happened, and then the volume just completely dried out, and we have just been in free for all essentially ever since. And so coming back down here, so if we are, continuing to make a move like what happened in April leading up to the May, beginning of June squeeze, this move came all the way back down and retraced to the 786. So currently right now we are in sort of this golden pocket area. The golden pocket is going to be where the 618 retracement meets this 0.65. That's what's called the golden pocket. So if we break below that, I would be looking for the 786 around that $16, $15 level before starting to push back up. Doesn't have to come all the way back down. Okay, and honestly, I kind of would be surprised, especially if the market is starting to look good this upcoming week. If the market looks bad, I think we hit the 786. If the market looks good, we can start pushing up from here. I have been preaching, a wave 3 starting. The majority of wave 2s are your harshest sell-offs, as well as they correct to the 618 retracement. If you kind of pull up, Elliott wave theory, wave 2 and Elliott wave theory, the wave 2 corrects wave 1, but can never extend beyond the starting point of wave 1. So for me, as long as we don't come past essentially that $12.90 level, wave 2 could still be occurring. Now, what I don't want to see is I don't want to see too much more retracement from here, because the more wave 2 retraces, then the more muted or smaller that wave 3 could become. Honestly, that's why I really wanted to see wave 3 starting around that 382 level. However, we didn't get it. This is also why I've been tweeting out that GameStop has looked quite a bit stronger, because it is just not pulling back near as hard as AMC has been. So once again, let's get back in here. So but can never extend beyond the starting point of wave 1, which we have not done yet. Typically, the news is still bad. Okay, I think we can all agree that for the most part, the overall sentiment in the market and everything like that is still, we're in an awful, bear market. This rally is fake. So I would definitely agree that overall the news still feels like it's bad. As prices retest the prior low, bearish sentiment quickly builds, and the crowd haughtily reminds all that the bear market is still deeply around. Still, some positive signs appear for those who are looking for volume. Volume should be lowering during wave 2, and that is absolutely what's happening right now. If we go look at this, wave 2, the volume has been decreasing the entire time. Other than one candle, the volume has been slowly coming down the entire time. Let's see here. So wave 2 during wave 1, prices usually do not retrace more than the 618 Fibonacci ratio. So that's pretty much what I'm looking at right now. So this fib right here is going to be set on non-log scale. Okay, I think both provide merit, but if you come in here when you're charting in log, if you go up to your settings and you scroll down, right at the very bottom it says fib levels based on log scale. If you click that, then it changes your levels based towards log scale. And you can see, if we get in here a little bit closer, how as soon as we hit that 618 right around 1877, we definitely had a nice push, back towards the upside. And then, towards the end of Friday, we started breaking down again. So I am definitely looking for a turnaround spot right in here. If we do a trend line, from the halt, right down in here, even if you kind of excuse the halt, if you will. So I think this falling wedge, is still very valid right here. We had the false breakout of the one that we were tracking right in here, just like GME had a false breakout on Friday. So as you can see, this falling wedge right here could take us down to the 786, rebound before we start pushing up. But once again, all this to me comes down to what is going to be happening in the overall market. And if the overall market is solid, we should see solid moves with AMC. If the overall market is kind of ugly, then AMC might stay ugly. We are coming in right here to the retest of what was kind of our previous support. Okay, so if we come back here, January 18th, it was support. Once it broke through, then it became resistance, and then it became resistance, and then it was resistance again. Then once we broke above, became support, back down, came support, back down, came back up, became resistance again. So we're getting to an important level right here at about this $18 range. If we can hold this $18 range, start moving back up, the volume starts increasing, coming back into the stock right here, then overall to me, the bullish move and the bullish sentiment would stay intact. If we start breaking below this from where this run started, essentially if we break below the 786 at this $15 range, I'm going to become relatively bearish at that point in time. And definitely if we make a new low at $12.90, then that's going to be, I don't want to say disheartening or anything like that. Obviously, I'm not selling, but that would be very frustrating because this move right here from the $12 up to the 34, it was a solid move with solid volume. So I'm totally fine with the retracing. I just don't want it to come back too far before we start, pushing back up. Let's jump in here and let's take a couple of look at the indicators, see what those might be telling us. So I'm going to go back to the daily chart. First things first, let's look at the EMAs. So I think we've pretty much lost all of the EMAs. Yep. So right here, getting back above essentially that $20 mark is going to help us start recovering like the 20 and the 50-day EMAs, then pushing back up towards the 100 and then the 200. So that's definitely what you want to see. Right now, once we broke below, you can see on Thursday of this past week how the 20 was pretty good resistance for us, kicked us back down, and then it was just ugly. But once again, look at the volume. The volume is drying up as so we pushed up here on nice solid volume, and the volume is coming down. The fact that Friday was only 42 million. I think I said on Friday in my tweet that a push down with 30 or less I would be okay with. So obviously this is more than that, but overall it's definitely still low volume. I mean, my goodness, we lost almost 8%, but on very little volume. So if the market rebounds, this won't be hard to recover this loss. So let's look at the MACD. So the MACD on the daily crossed on, that would have been Wednesday of this past week. So as you can see, once we crossed, the MACD, that's definitely going to be what is, helping us push down. Traders don't like to see this. If we can get this blue line, curling back up above the orange line, if we can get that cross, then that would be a very bullish indicator as well. Can't have that up there. Pull up the Bollinger Bands. So this is good to see. So they started widening on our push up. So the Bollinger Bands are supposed to capture about 95% of the move that's going on. So you can see right here, we started getting way outside the Bollinger Bands. So coming back, towards that moving average is unsurprising. The Bollinger Band's starting to tighten again. All this is what we want to see as far as those are concerned. And then the 1348 EMAs were below those. So yeah, I mean, like I said, I'm not going to sugarcoat it, guys. A lot of the indicators, would indicate bearish movement. Now, as long as we don't get the cross here, if we just came down here, started moving back up, that would be fine. So I know this is not what anybody wants to hear, but I really am kind of at a 50-50 standpoint, and I really am at a what's the overall market going to do. So the RSI, I would have really liked to see us come down here to like the 50 range and then started pushing back up on the RSI. The RSI is going to be in kind of this neutral territory right now, but we definitely want to, anything kind of above that 50 indicates that bulls are in control. Once we started getting, very overbought up here, then, that's when we, you can see pretty much the only other times the RSI has gotten hotter is when we squeezed, gamma squeezed and everything like that back here in June and January. Got up to about 95 on the RSI. So the RSI was definitely getting hot. We still had a little bit of room to run, but I don't think we had too much more anyway. And yes, that halt was completely BS, but moving on. So yeah, I mean, there's just not a lot to talk about. I'm pretty 50-50 on this week as far as what I think might happen. I think we're in the hands of the overall market, my friends. I really do. I would love to see, the market starting to gain some momentum. I would like to see us, start pushing up with that momentum. And yeah, that's pretty much going to be everything. Sorry I can't give you, more help or more information than that, but like I said, I really think we're in a very limbo state right here. So for me, what would be most bullish is obviously starting on Monday. We start pushing back up. Let's start recovering the 20s and heading higher. This week is a short week, so the market is going to be closed on Friday for Good Friday. So this week is a short week. It's a monthly, options expiration. So I think a pretty sideways, if we could, this isn't going to be the sexiest answer, but if we could essentially hold, this area, kind of trade, sideways most of the week and start pushing back up here, then I think that overall, leading into the following week, we could start seeing, a push back up. So, or even a little bit of a dip, and then, but overall, a relatively flat week. Speaking of weeks, I did want to jump in here and check the MACD on the weekly. So, whoops. Always do that. So, it is still green, and it actually is still pointing up a little bit. So, this all looks good on the weekly. Not going to sugarcoat it. That candle is ugly. That is a bearish engulfing candle on the weekly. However, the volume is super low. If this candle looked like this and that volume was super high, I would be way more concerned. But the volume is really low on that. So, yeah, that's going to be pretty much everything. I think my most likely scenario is a relatively flat week with, some slight upside. Whether it's, we kind of dip at the beginning of the week and curl up, that would be what I like to see most. Or if we kind of shoot up on Monday and Tuesday and then dip back down towards the end of the week. But I think overall kind of being a little range bound on a short week is probably with, monthly option expiration date, I think is most likely. Let's look at the option chain. So 20, there's 12,001, or no, excuse me, at 20, there's 21,000. So that would be huge. If we could start pushing up towards 20, there would definitely have to be some hedging going on. And then at 25, there's a lot. Let's see here. I know at 30, there's going to be a lot. Yep, 30, there's 15,000. Let's see what puts are looking like. So, yeah, 17. There's going to be a lot of puts, so they might. Yeah, I mean, so from an option standpoint, guys, if we do start dropping, they're going to start having to hedge, for, we can just as easily see a reverse gamma squeeze, not gamma squeeze, but we can see reverse gamma movement as we do see, positive gamma movement that we're going to be looking for. So, there's a lot at 14, a lot at 16, a lot at 17. So, yeah, I mean, it looks pretty neutral, which makes sense. It makes sense that the IV is going to be pretty neutral. So, keep an eye on that. But to me, like I said, the two most important things are going to be, if the option chain is pretty balanced, then the overall market is going to take over. And if the overall market is, nice and super green, then we could see some real nice movement this week. If not, then, if the market is really ugly, then we could see, a lot of pressure to the downside. But like I said, I think my most likely scenario is going to be a relatively flat week on, so long as we stay pretty flat, so long as the volume stays nice and low, overall, I'll still remain pretty bullish. So that's going to be what I'm going to be looking for. Hope you guys had a wonderful weekend. Let's jump into this week, see what happens. But no matter what, stay cool, stay kind. Let's do this. Y'all have a great weekend.